Welcome to January 2019's webinar for our client-only webinar. And today I'm going to talk to you about how to pay less taxes from Airbnb income. A couple weeks ago, I was invited to do a presentation on the tax impact on earning Airbnb income. And I understand a lot of you are getting into Airbnb income mainly to bypass the Residential Tenancy Act. And I understand that if you do short-term rental, you get a lot of money, good return, and you also get to bypass all these nonsense dealing with landlord-tenant board. So I figure it would be a good idea to repeat that presentation, except that I would add in a couple more slides in terms of the actual deductions that you're allowed to make versus all these all these strategies available that you could use to lower your taxes if you were to turn your rental to an Airbnb rental. Now let's start. Okay, so here I'm going to show you my personal best record on doing squats, and that was sometime last year, and I show it to my my presentation cloud earlier, and I thought it would be fun to share that with you as well. And that was me doing 150 pounds, and I was 100 maybe close to 130 pounds at the time, so it was a little bit over my weight. I think according to my trainer, it was best to be, I could do anywhere, a good goal would be to squat about 1.5 times of my body weight. And obviously I'm not there yet, and I don't know if I would ever get there because I stopped training to get a better record for squat after that. But today I'm still training. I still try my best to go to the gym 3 times a week. It is hard, and every time I do the workout, it gives me butterflies inside me. And so here is the second picture of me and my husband. That was all shared among all these new investors that do not know me before. That's my website. And now let's just get back to doing presentation on Airbnb income. When you earn more Airbnb income, obviously, if you are familiar with the personal tax system in Canada, we have a progressive tax system. What it means is that whenever the more you make, the more tax you get. The more you get taxed at. So for example, if you remember earlier when many of you met me through the Rockstar crowd, and I often do a presentation on how our personal tax system works. Basically, anywhere between $0 to $10,000, you don't get taxed at all. Anywhere between $10,000 to $20,000, you may get taxed at 5%, and anywhere between $20,000 and $25,000, you may get taxed at 10%. So essentially, the different chunk of income is being a different rate is being applied. So anything above and beyond 100,000, you're looking at tax rate of another 43% tax. So if you already make $100,000 base salary or $200,000 base salary, it's pretty simple to apply a 50% tax rate to your additional Airbnb income. And that's how much you would have to pay. Obviously, you would be able to deduct all the corresponding expenses against the Airbnb income, but you would still pay about 50% on whatever net amount that you are getting. Now, there is a bunch of allowable deduction. The general rule is that you are eligible to deduct anything for you incur for the purpose of earning the income. This includes advertising, property tax, insurance, property management, repairs and maintenance, mortgage interest, cleaning services, and these are the typical standard, I guess, straight rental. These expenses would still apply to straight rental. You may also have some specific Airbnb expenses that you would like to deduct. One of them is the Airbnb fees. So I understand that Airbnb also charged the owner an administration fees, and included in the administration fees is the insurance that Airbnb provide. So that Airbnb fees would be tax deductible. You may also hire a property manager, which would account for 20% of the revenue as high as 20%. And if you do short-term rental, apparently around Blue Mountain area, and you use their service, the Blue Mountain Short-Term Rental Association or something like that, they charge as much as 50%. So property management fees accounted for a lot of the expenses. So be sure to keep track of that. Cleaning fees, I'm pretty sure majority of our investors would not be cleaning themselves, and they would be hiring a cleaner to do the cleaning, and that cleaning service is deductible. Maid service, if you provide food, or if you provide cleaning service on a daily basis, or you do laundry services for your Airbnb tenant, and these services are related to earning the income, that would also be deductible. Coffee machines, coffee pots, salt and pepper, olive oil, beach pass. These are just a few examples that Airbnb owners go above and beyond the basic hotel services to attract Airbnb tenants. And all these additional supplies that you provide would also be deductible, because you are incurring it for the purpose of earning the income, assuming that all these coffee machines and coffee pots are made available at the Airbnb location. Photography expense. My understanding is that it's very important to use a professional photographer to take pictures of your Airbnb, because they actually use these. A lot of the Airbnb tenants are using basing their decision on the photography that you see. So these would be 100% deductible as an advertising expense. Furniture and fixtures. Many of us would buy brand new furnitures, or like whether it is brand new or not, it is new to the property. All these furniture and fixtures, new curtains, new wall art, all these decoration would be considered brand new, and they would be capitalized as equipment and additional furniture and fixture rather than a one-time write-off. What it means is that you can claim 30% of the furniture and fixture on an annual basis against your rental income instead of a one-time write-off. So the rental write-off on furniture and fixture is slightly different from a regular day-to-day expense. Cell phone expense. If you're the one that's managing the property and you are on your cell phone 24/7, managing the review of Airbnb, answering potential Airbnb tenants' questions, these are the things that you legitimately incur the cell phone expense to manage your properties, and that is 100% deductible, as long as you can provide a proof and make sure that you keep the documentation. Now, the last thing that is specific to Airbnb owner is HST. HST is if you earn anything over $30,000 from an Airbnb property. And typically, if you don't earn anything over $30,000 from Airbnb, what's the point of doing Airbnb anyway? So I would say 90-95% of us would earn over $30,000 Airbnb income. And that $30,000 represent the small suppliers limit. And if you are already personally self-employed, for example, if you are a realtor or you already have your own business, this $30,000 small supplier limit is only is calculated based on the combined income on all the taxable supplies. So what it means is that if you earn $20,000 from your Airbnb income and you earn another $20,000 from your self-employed income, these two combined, the taxable supplies is truly $40,000, and $40,000 is exceeding the $30,000 small supplier exemption limit. So you would have to charge HST. And my understanding is that on Airbnb, you're not allowed to charge an additional HST on top of what you're charging. So what it means is that you would have to build in the HST component on top of what you're charging. So if you're charging $10,000 for Airbnb, you want to net $10,000 after HST. What it means is that you have to charge $11,300 to account for the HST impact. Now, these are the deductions that are specific to Airbnb owners. And of course, we mentioned earlier that there are all these usual Airbnb expenses, including mortgage, property taxes, mortgage interest, property taxes, utilities and internet, insurance, home office expense, repairs and maintenance, accounting fees, automobile expenses. These are all legitimately deductible expenses.